Well, I'm gonna be that guy.
In this video, I'm going to be breaking down why I think the old stock market is about to get absolutely clapped. I know. If you've been watching my recent videos, I've been pretty freaking bullish, and I've also not just been talking the talk, I've been walking the walk, buying calls, and it's been a beautiful ride to the upside. And most of my reasoning for that is all of the data we've been taking in. I had no reason to not be bullish. However, due to some recent developments, I am flipping teams. I'm officially switching it up, and in this video, I'm going to be explaining why. Now, very quickly, there are a few things you should know. Now, I get it, stock market crash. Hey, that's a part of just social media and the internet. Those are the types of things you have to say to get people to pay attention. I don't think the stock market is going to crash, but I do think it's going to drop. And I also don't think it's because of any of the recent news. For example, the US-China trade talks, what's going on with the Fed, what's happening with earnings. If anything, I think it's wildly different. In fact, as you're going to see in this video, a lot of those things actually favor the bulls. What I see going on right now is there's way too many people who don't understand options. They YOLO'd into options, and all of a sudden, when there's going to be a considerable unwind from those plays, well, down we go. But very quickly, if you enjoy these videos when we get into the actual stats, facts, and figures of the market and the data and everything related to it, don't forget to like, don't forget to subscribe, don't forget to share this video with your grandma. And with that being said, let's get into it. We have one day to go to wrap up the week and the month, and things are looking a little bit spooky. Stocks closed lower, with Nasdaq down 1.6% as big tech leaders Meta and Microsoft decline after earnings. So overall, if you were paying attention to the intraday session, we opened up, it was a little bit weak, then we were flat, and things kind of started to deteriorate around 2 p.m. in the SPY, in the Nasdaq, really in the Russell, they started to break down around 11:30, and Bitcoin took a big hit, dropping from about 111,000 to about 106, 107. In post-market, as I'm filming this right now, there's a little bit of a pop because of Amazon's earnings, and more on that in 1 second. But rather than focusing on this, because this is really zoomed in, let's take a look at the daily chart. First thing you're going to notice is, yes, we hit an all-time high yesterday, and from a technical perspective, I do think it's worthwhile to call out the downside gap fill to 6807, and then there's another one at 6750. I think that's pretty basic, and you're going to see a similar one in the Nasdaq down here at 25,418, and the other one is at 126, but same thing, we hit an all-time high yesterday. So yes, in terms of price action and momentum, it is hard to say you're quote-unquote bearish when we just hit an all-time high, but what I'm trying to get across in this video is that I think it's statistically more likely that we fill these downside gaps before we push for a new all-time high. Anyway, the Russell, even weaker, not making an all-time high, and I'm looking at a test of this 50 EMA, and as I already alluded to, Bitcoin putting in this lower high, taking a big hit over the past 3 or 4 days, and really I'm looking at this shelf around $104-ish thousand. So that pretty much answers the question of where are we at, but a better question is what in the world is going on? In reality, this all started yesterday around 2 p.m. Eastern when we got the Fed interest rate decision, and you probably know this already, but they decided to drop the rates by 0.25%, which is what everyone and their brother expected, so it removed a little bit of uncertainty and really didn't sway it. What had a big impact on the market was 30 minutes later when Jerome Powell started talking. In fact, 5 minutes into the speech, we had some questions about the dissenting votes. There were 2 Fed dissents. Herein wants a bigger rate cut. He wanted a 50 bips rate cut, and Schmid voted for no easing at all. So he basically didn't even want the 25 bips rate cut. It's rare, but not incredibly rare to have dissenting votes. What's very strange is when you have dissenting votes in the opposite direction. One wanted 50 bips while one wanted none at all. And when Jerome Powell, the chairman of the Fed, was asked of it, he didn't answer it in the best of way. Fed divisions reveal new caution over continued cuts. Powell warns against assuming another rate cut is a done deal as officials navigate an economy where spending is solid but hiring has slowed. So as of 2:30, in fact, as of 2:34, everyone and their brother was expecting another 25 bips rate cut in December. However, as Jerome Powell, the chairman of the Fed, was getting grilled by everyone sitting there, he basically said, hey, nothing is etched in stone. Don't make any assumptions of what's going on because we're going to figure it out as the data comes in. And as soon as he said that, I mean, check out the market. Right at 2:35 was when it happened. You could see the odds of a 25 bips rate cut at the December meeting just started to plummet. We went from 85% down to 68%, and right here on Kohrs, we went from roughly 84% down to about 67%. So pretty similar, but clearly when the market's like, whoa, we were expecting money to be cheaper, i.e. another 25 bips rate cut, and now that might not happen. Well, that's what jostled the market yesterday going into the overnight session, where we were fast asleep at 10 p.m. and we had the meeting between President Trump and President Xi, and this eventually proved to be exactly what we were expecting. Trump and Xi truce buys time in broader fight for dominance and leverage. Basically, they paved themselves a one-year runway, and like I said, it was pretty good. And even with respect to the Fed, hey, 25 bips rate cut, that's what we were expecting, and I get that right now December is quote-unquote questionable, but we all know we're going to get another 25 bips rate cut. In between all of that, we even managed to get some mixed news as it relates to the Mag 7. We got the reporting from Meta, Microsoft, and Alphabet. Alphabet, aka Google, did very good. Alphabet tops 100 billion quarterly revenue for first time. Cloud grows 34%. Meta, not so good. Meta stock drops 10% as heightened AI spending overshadows strong third quarter results. And Microsoft also not so good. Microsoft drops on forecast for increased spending growth this year. So basically 1 out of 3, but like I said, it's a mixed situation. Overall, the meeting with Trump and Xi, very good. The Fed did exactly what expected, and we know December is going to be fine. And when it comes to earnings, yeah, okay, they weren't the best, but they were decent. They were acceptable. A little bit bullish, a little bit bearish. We'll move on with our life. Very quickly, as a side note, as I'm filming this right now, Amazon is reporting. That's why we saw a little bit of a pop in post-market. And by the time I'm done filming this, we won't have Apple, but by the time my editor gets to it and you're watching it, Apple will have already reported. So please pay attention to that. Coinbase, Reddit, MicroStrategy, Rocket Companies, Riot, Cloudflare, and Roku, all going to have an impact. And before the market opens tomorrow, pay attention to the energy plays, ExxonMobil and Chevron. But anyway, I digress. This is the point in the video where you're probably sitting there thinking to yourself, what in the world is this guy going on about? He admits we just hit an all-time high. Price structure is strong, higher highs, higher lows. Price momentum is strong, prices above all the major EMAs. And in terms of big events, we have good stuff going on with the Fed, good stuff going on with China, good stuff going on with trade deals. And earnings, well, they're not the most amazing thing, but they're neutral to bullish. So why in the world am I possibly saying, hey, I'm leaning a bit more bearish? Well, the answer to that is the options market. As you probably know, quarter over quarter, month over month, and seemingly week over week, options trading in terms of the amount of contracts being traded is growing like no other. When I first learned about trading, everyone referred to the stock market as the dog that wags the tail of the options market. Well, because of the prolific usage of options contracts now, basically the options market is the dog, it is the leash, it is the walker, it is the tail, it is the entire dog park. And we kind of just look at stocks as, I don't know, a scoreboard of sorts. What I'm trying to say, and I'll admit I'm not saying it well, is the options market is the thing. It is the ultimate decider of what in the world is going on, what's going up, what's going down, and what's going sideways, which means we need to know what in the world is going on in the options market. Fortunately for us, we have access to Spot Gamma, which is by far the best options analytics tool you could possibly get your hands on. Right here, you can see a bunch of different equities, basically a lot of the Mag 7 and the overall market, and you can see IV, high IV, low IV. Maybe you probably know what that is, just the implied volatility. But what I really want to point out is, are things call heavy or are they put heavy? As in, what's expensive right now? You're going to notice that over the past here, I could actually put on something pretty cool here. Let me do it over the past 10 days and we'll make it big again. You can see that everything has taken a gigantic shift to the right, as in it went from being a little bit put dominant to now the calls are extremely heavy. Well, why do calls get expensive? Classic supply and demand. Calls get heavy when everyone's trying to buy calls. This is telling us the fact that everything is extremely to the right. Everything's over here. These, not only the SPX, SPY, Qs, NDX, Apple, Microsoft, Meta, Google, Amazon, everything is extremely to the right. Yeah, Tesla and AMD maybe are fairly priced, but right here, everyone is punting calls like no other. Well, when everyone's getting into it, that means you're overpaying. It's classic supply and demand. Where there's that much demand, people are going to overpay. And you can see this here in the SPY right here. Here's a little bit of the skew. Remember this cone? That's going to be most of the time your 80% of where the prices is. The fact that current prices are on the top means that people are slightly overpaying for calls. And right here, the fact that the line's in the middle means puts are fairly priced. But if you look at the Qs, they're above the cone, as in people are paying a monstrous amount for calls right now, while puts are once again fairly priced. I know that we're getting into the nitty-gritty of options and skew and Greeks, but it is incredibly important, so let me explain it this way. Right now, there's a massive demand for options, specifically call options in the world of tech and the Mag 7. Everyone's been buying them, so the price is going higher and higher, so people are overpaying for calls. That works if we get phenomenal news and things just keep going, because even though they overpaid, it becomes more valuable, and hey, they're happy. They made money. However, as we all learned when we used to party in college, the party cannot go on forever. This will keep working as long as all the news we get keeps beating expectations. But as soon as something hits expectations, or God forbid, misses expectations, well, you're going to see all these calls, the people who bought at too high of a price, all of a sudden the price is going to come down, they're going to be at a loss, and then they're going to start to puke these positions. And once again, without really getting into the weeds here, when you start to puke all of your calls, that's going to drop the delta, and then all of a sudden the market makers, to hedge out their books when they were buying the underlying, pushing it higher and higher and higher, well, they're going to start to sell, and then before you know it, everything starts to drop. And just to prove my point, this isn't just conjecture of what might happen. We can actually track it. Right here, intraday, this was the delta flow of the Mag 7. Once again, the Magnificent 7, the combination of Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. And right here, I can show you right at market open. Just because Google hit, well, Meta and Microsoft not that good. Look at the calls. They got dumped from market open pretty much until the end of the day. They were just selling. This was not going down because people were betting against it. People weren't getting into puts. They weren't going short. They were getting out of the calls that they bought way too many of for way too high of a price. And unless we literally have perfection for the remaining earnings and the inflation reports, if we do not have perfection, well, these people are going to realize pretty sizable losses, even if we go up a little bit, because they're not understanding the vol crush of this situation. So if they see those losses and sell, you get this giant call position unwind, and then that drives everything lower. And from a technical perspective, as I said before, I'm looking for the downside gap fill on the S&P 500. There's 2 there, and then there's also 2 on the NASDAQ. I hope that makes sense. Of course, if you have any questions, let me know in a comment below. And I should also make it clear, these are my own thoughts and opinions. Maybe I'm right, maybe I'm wrong, maybe I'm somewhere in the middle, but I just want to let you guys all know how I'm currently approaching the existing market dynamic. That's what I have for you today. I appreciate all the good vibes. I'll catch you guys manana. Have a good one.
Peace.